Okay, that's gold, spot gold price in US dollars. That's the weekly. And the squeeze is on. Yes, it continues to reside in this narrow territory. It's getting narrower and narrower by the day. But there is absolutely nothing that I've seen in the past week or in the past several weeks to suggest that I need to change camps. I am a bull now and I stay a bull. I don't see any reason to abandon the bullish camp. And the situation is not going to change as long as it stays above 1,300. If it continues here, and I don't think it's going to continue here for a long time, I think within a week or two I really see a resolution here. I would be surprised if 2 weeks from now we are still stuck here. That would surprise me. It could happen, you know, but I would imagine that at some point we're going to get a trigger, some sort of stimulus to get it to move out of this trading range, and my bet that it's going down. Okay, nothing changed. It's still looking like it's delivering all the legs necessary to complete this ideal fourth wave structure, ideal triangle fourth wave structure. And when it works, you don't want to mess up with it. There is no need to second guess yourself. If things are working, what you want to do is just not get in the way. And right now it appears to be working. That is the daily now. That's an A, that's a B, that's a C. That's a D, and that's potentially the final the final touches of the E leg as it is coming down. Now you can see the limit is very clearly defined here, just under 1,300. It can come down slightly further here. In fact, I think it's likely to do that in this manner, but then I expect support to come in and push it higher. And if indeed that's the entire E leg, it's behind us, then that's your first alarm, that's your second alarm. By the time it flies above this level, we are probably already getting a lot of momentum on the side of the bulls here to push it higher, and it's going to continue with tracing that huge fifth leg on the red scale. Let's now see the 60 minutes. And here's one interpretation for the descent that we have seen here. The D ended here, okay, on my 60 minutes. The D ended here. I take this as an ABC, that's an X. I come down, I take this as an A, fairly longish. It could have ended here, it's not going to make a huge difference. That is taken as a B, and that's a final drop, C. So yes, the C could continue, definitely. Let's go and see the 10 minutes. Right here, and we could be talking about a 1 2 1 2 1 2 3 4 3 4 etc. So I suspect there is further downside here. Okay, it would fit very much the development here, further downside going under 13.14, under 13.12, but I do not expect a huge slide to go and break 1,300. If it does, then it will definitely require reassessment of the wave count. Coming back, having gone down, coming back very short term, and I'm looking at the 10-minute chart, coming back and settling above 13.28, that could perhaps really be the first sign that the E leg is behind us, and that is in fact this price action, especially if it's very impulsive, it's sort of a violent reversal like that, that could indeed mark the beginning of that impulse wave that I expect to take gold way higher. Now, here's gold priced in British pounds. It is interesting to look at gold as it performs against various currencies. They say that the major bull market in the precious metals would see the precious metals advancing against all, ideally against all currencies, because it is a genuine bull market. And I will look at various currencies from time to time. I've got here now the British pound. You can see since 2011, when it hit the top, it had miserable performance here, which was very similar to what we have witnessed in the entire mining sector. Yes, that's not a big secret. right here I would expect this to be the bottom. In fact, you can see there was a failure, but I think that that is the genuine bottom of the entire correction. Okay, and there are various ways of subdividing it. I didn't go into that. I decided to focus on the bottom right here, and that's where I start counting. And as you can see, the gold price in pound actually made a big progress here, because it's not a secret again that the pound is very weak. The pound is terribly weak. We had Brexit, the pound, sorry, the pound got a serious knock, and gold took advantage of all that. You can see the distance that it covered. We cannot say the same thing when we come to check gold in its performance against other currencies. Okay, so what we have here appears to me to be reasonably clear, a situation of a 1, 2, 3, 4, which is identical to the structure we're using in the case of gold priced in US dollars. Okay, also have there we have a fourth wave, and that's what I see. That's 1, 2, 1, 2, 3, 4, 5, 3, A, B, C, D. Very, very similar. I don't see any issue here. Let's go to the daily. And here's the daily with the subdivisions. That's an A, B, C, D. Yeah, A, B, C gives you the D. And we are in the final plunge. In the final plunge, E. And let's now zoom into the 60 minutes. And you will see the structure as it shows up here, supporting further downside in gold with a 1, 2. Remember, this is the 60 minutes, so that's a 1, 2, 3, 4, 5, A, B, C, one option. Okay, so that gives you an A, that's a B, and we're looking for the C. We're looking for the C down. That could potentially be the last leg. Now, I put here 1, 2, 3, 4, 5, but it's quite possible it's going to become slightly more complex than this, or it could be something like that. Okay, just to give you a few ideas here, you see it could do something like that, and then smash down again, and that. So what you do, you have to treat this as 1, 2, 3, 4, 5 complete C. So if it runs down to 995, 992, that's okay. That's definitely within the pattern that we are working with. It will become very, very interesting for those who like to follow it priced in pounds, if it does that. Right? If it runs above this level, then this is news. Just under 1040, you see the line here. You may want to, if you decide to follow this one, you may want to put it on your chart, this line, an alarm right here. Once it finishes with the business of delivering that C, whether it fails or not, whatever, it runs back just above this line. We have news. We have news. We are potentially looking at a surge, fifth leg underway. Now here's silver, spot silver priced in US dollars. That's the weekly. Not a lot has changed. The past week has been again range bound, and again fulfilling the expectation that we are in a fourth wave situation. So I still work with the idea, nothing changed, that this is 1, this is 2, this is 3, or 3 might have ended here, but we are not going to spend hours quarreling about that. There is no point. It ended somewhere around here. We are now in a fourth wave. Look, why make our life so difficult? That's a 1, 2, that's a 3, that's a 4. Okay, that's basically it. We are in a fourth wave. It's staying away from the black line. It's staying away from a trigger level that would force us to change the wave count. If it does crash through 18, then we can start reviewing the matter, whether we are in an ABC situation, and that will be bearish. That could project silver heading a lot lower. But right now, this is not the case. Okay, let's be absolutely clear. This is not the case. The support that we detected being lent by the 21 moving average is still there. Do you remember that? It's still there. So there is absolutely no reason for us to abandon the bull and that's what I'm doing. I'm sticking with the bull. That's an A, that's a B, that's a C, that's a D, and here are the final legs of what I think is going to be our E, and several projections I put here. Let's go and zoom in on 60 minutes here to give us an idea. Coming down, 1, 2, 3, 4, 5, that's your A, B, C, that's your B, slice, right down. So I take this to be a C, okay, and I think that silver is going to break under 18.9, okay, will break under 18.9 and might even go quite a lot lower, right here, might go quite a lot lower. There is no problem with the interpretation here, even if it reaches 18.6, but I think we would have to review the wave count if it breaks the blue line that you see here just under 18.4. Okay, that will be a touch too far for the structure that we are using, but anything that terminates around here or here, that's fine. What really counts is to see the reversal going and running above this blue line. Okay, that's your first sign. Okay, now it's turning into orange, but the point is it has to run about 2010. The very first sign, if you like, if you're really focused on silver and you really sort of want to shoot very sharp here, one possibility is for you to put an alarm right here at 19.7. Suppose you get that drop, it runs down, it comes back. It comes back above this line. That's important. It's not as important as running above this line, but running above this line will be important, because if you come down and you can show 5 legs, then you can show that you have potentially C complete, and you have your A, you have your B, you have your C complete. For the C to be equal to the A, I've put here the ratio, it should go down to 18.53. That is quite possible. But if it even fails and it doesn't manage to run that high, but it does give you a structure of 5 legs around here, sorry, and then it begins to run up, the first time it shoots above 19.7, you probably have news. You have news. Mr. Market is calling you to pay attention that the ABC is behind you, the E leg could be over, the fourth wave could be over, and it might be ready to run. Okay, this is silver priced in British pound. That's the weekly. And you can see that silver has not made so much progress as gold made vis-a-vis the British pound. You remember gold was around here when we looked at it. That is the high, the same high in 2011. And the bottom is taken to have taken place right here. Okay, I start counting from here, and I have reasonably clear structure of 1, 2, 3, 4. Okay, I'm going to the daily now, and that's what I see running up from the bottom, straight bottom, clear bottom that we have here. That is taken as 1, 2, 1, 2, 3, 4, 3, 4, 5, fourth wave in action, and I do not expect silver to break 14 in British pound. No. I think it's probably going to go down, could even go down towards 14, but I don't expect this to break. Breaking this is news, not good news necessarily for the bulls. Running above this level, 15.25, 15.3 is news. I think could suggest that the fourth wave is over, and we're looking for this market to turn up sharply. It's the same structure basically. That's your A, that's your A, B, C. Okay, you're looking for the C down. So for those who want to focus on this one, that is an important level for you to watch. It runs down, it comes back, it shoots above this level. That's news. It shoots above this level. That's substantial signal. It is likely to continue higher. Okay, this is another interesting look at silver, but as it is trading through the vehicle of the iShares Silver Trust. Okay, that's the symbol SLV, traded in the US in US dollars, and I referred to it once in the past. I like to check it from time to time because the pattern here comes out really clearly, much clearer than in the commodity itself, in the in silver price in US dollars. So here I have no issue with this being 1, 2, that's 3, that's still a fourth wave. And you can see the squeeze on the weekly between the 200 moving average and the 21. The 21 is definitely playing as important support, no question. And now let's go for the daily, and you will see the structure coming out reasonably clear. 1, 2, 3, A, B, C, D, and I expect the E leg to terminate in the coming week. Okay, I expect it to terminate. It will be well balanced on the time scale. Staying in the tight range that I've got here would be ideal. Okay, I don't know what Mr. Market is going to deliver, but that is my best projection at this point. You see, something like that, and then running back up, shooting above 19. That's news. This is already news, but not as important as the news when it will cross above 19. That would tell you you've got your fourth wave behind you, it's running up, and the run up is going to be substantial, because if you count that the third wave can't be the shortest, okay, you're talking about a scale of 19.5, that's 50, about $4, roughly $4.5 from this level. Okay, pretty substantial run.